Hey everyone, it's time for our weekly market update, and we had quite an interesting week last one, and also this week we have several very important news events that are happening, and we're gonna go over some charts. I'm gonna share you as always my thoughts and what my plans are for the coming weeks. First of all, let's start with the weekly chart of Bitcoin, and as you can see here, last week we had almost 10% gains, which pretty much happened on one day. We retested this lower range here around 18k support, and price actually reversed from there, and we have already several green days in a row, 6th day in a row today, and we're currently back at around 22k and retesting the 100-day moving average. So we discussed this last week a little bit, but finally Bitcoin decided to play catch up with the S&P, and for now the capitulation scenario that we were discussing back last week is not playing out, obviously. What could happen here, of course, is just anyone's guess, and if we go back to the weekly chart, I want to show you several ways that you can read this price action. First of all, we're still in this bear trend that we're looking at right here. We still have lower highs all the way, and currently we have some signs that this could be finally turning into an accumulation zone right here. And where exactly will be the accumulation zone is again anyone's guess. You can use, for example, this area right here around 25k where we had a couple of reactions. I personally prefer to use the 28k area just because on the daily chart we have a lot more clearer reactions, and for me personally it just makes a little bit more sense. But however you want to read this, I think this entire area is pretty much just a big old chop zone, and we just have to wait how price action will play out. If Bitcoin will break above this area right here and come and retest again the 25k, which is also confluence area with the big descending line we just discussed, and potentially confirm this lower level at 25k as the accumulation zone. There are just many unknowns, and that's why in this entire area I'm not trying to guess. I'm just letting price action tell me what's going to happen, give me clear signs of what we're going to do here, and based on that I will be making my trading decisions, obviously. Which scenario I'm currently mostly looking at, I believe we're about to correct at least a little bit, just because also if you look at the S&P, it's been on a tear for the past several days, and even today if we look at the mini futures, you'll be able to see that we're again having a green day, but again still on the long-term scale you can see that we're still in a bear market territory with lower highs all the way. So even if we get a couple of more green days, I think we'll find some kind of resistance in this area right here. There are plenty of reasons for this, and the main question that is on my head right now is this going to turn into another higher low? So let's say we turn this area around 100-day moving average, or even right here, to support and attempt to break this bearish line right here, or this entire rally right here is just a bear market rally in anticipation of the CPI number, which actually comes tomorrow, and everyone is kind of expecting to be lower than the previous months, so we're kind of flattening the curve of inflation. We just have to wait a little bit and see how this entire market structure will play out. I'm currently not in any trades. I'm just holding my BTC hedge short, which right now is actually at break even or around break even. So I entered around 22k, and as you can see here, with the test of the 100-day moving average on BTC, I'm almost at break even of the remaining of the position. I'm happy that I took some profit here, but since I was leaning more towards the bearish case, I didn't take 50% profit, I just took 20%, but still for me that's okay. I'm fine with the risk. This is just a hedge for me. If my BTC long holdings are growing, that's fine, and the hedge is relatively small amount compared to my holdings, so that's fine. And if we break the 100-day moving average and we stay above this level right here, I'll probably cut out my short for now just to protect my upside risk, since I'm using a bit of a leverage here. And if I find another setup potentially in the future. So maybe if we confirm this again as an accumulation play and we get rejected somewhere in this area around 25k, or even here, you know, in the 28k area, and turn back to confirm this as an accumulation range, then I'll look for another setup to hedge my portfolio. But even if I don't, I'm totally fine with it. You know, if this entire chop zone plays for months or for years, I can be patient. You know, I have plenty of capital, plenty of cash on the sidelines, just waiting for the market to give us clearer signs, and then obviously start looking for cleaner setups with higher probability to play out in our favor. One big thing also that is happening this week is obviously the Ethereum merge. And if we look at the chart, we're currently turning the 1700 resistance level back into support since we broke during the weekend above this level. What can happen this week? I'm not expecting any massive runs, and even if we do, I'm prepared, you know, to kind of hedge my existing Ethereum holdings, as I mentioned before, somewhere around this area. If we don't get there, and if we just you know, are stuck in this level and chop around, there's no action for me to be taken. For me personally, the merge is already priced in and it will be kind of a non-event. And as the hype dies down, it will really depend how the stock market will play out and also Bitcoin's price. And Ethereum will just follow suit with the remainder of the market. I'm not expecting Ethereum to just blow up just because of the merge, because there need to be buyers there. You know, the merge is great, it will reduce the supply and the inflation of Ethereum, but unless there are people that are willing to buy Ethereum, I don't think the price will make significant moves to the upside. We can also look at some altcoin charts. There are several that are quite interesting, at least in my opinion. The first one is Atom. Atom is one of the, I would say, unicorns in the past several weeks. It's been into this tear of a little bull run here, and we had a very big breakout above this $13 level. As you can see, we had a couple of reactions. We had a higher low here, so we turned this into a really nice setup for a breakout, and on the day here we had about 20% gains, and we retested this level around $17, and now we're just floating around here the 200-day moving average. Could this be preparing for another leg up, and could this be potentially a good trade setup? So if we take this as a breakout level, to this level here is around 12% risk, so it's actually not a very bad risk to set on a single trade, but I'm not really sure that I want to take this setup, especially after the run that Atom has had, and especially because, you know, the probability of numerous breakouts playing out in a bear market is very, very low. I'm not so confident that I want to be taking this setup after, you know, this kind of price action that is playing out. Another one that it's kind of popping off is Solana. Solana is still kind of mid-range, so we're in this kind of an accumulation zone right here, but as you can see today we're popping off with 8% candle. It's kind of catching up with the rest of the market because Solana has been kind of slow in the past weeks. But even if we break this level, it's kind of like Ethereum a week or two ago. Again, we have plenty of resistance overhead, and I'm not expecting anything significant for Solana to happen right here. Another one is AVAX. AVAX is pretty much in a similar situation. However, we're having a confluence area here of resistance around 21 bucks, I would say, where we have the 100-day moving average and this resistance line right here. So potentially this could also be setting up for a trade. Maybe if we take this breakout here, we have around 20% risk to this first level is like 35% gains, and probably here to the next level around 100% gains. Again, not a great setup to be honest, but one that I'll be watching because just AVAX has been a very good performer in the past bull season. So it's interesting to see what's going to happen here. DOT is another one that's just chopping around here. You know, you can see the same range, pretty much the same chart like most of the other altcoins, but I do still have some DOT and I'm planning to keep it for the long run. So I'm still tracking what's going to happen here. Also Link is another one. I don't have Link anymore in my portfolio, and it's been quite a choppy ride here in this accumulation. From top to bottom it's like 50%, on the other way up it's like 70%, so quite choppy. But again, potentially, since we also have very big confluence area here around $10 and the 200-day moving average, potentially if the market decides to go a little bit more bullish and breakouts are again still in play, this is one to watch. Or if you really like Link, I think this entire area could be a nice place to start accumulating a little bit for the next bull run. This is pretty much everything for this week's update. If you have any questions or if you want me to look at some charts, as always, you know how to find me.